Commodity TV, live from the Mines and Money in London, day number 2, and our first interview guest is somebody I would say out of the energy metal space, I would call it. Nigel Robinson, the CEO of Central Asia Metals.
Yes, good morning, Tim. I'm very well, thank you. How are you?
Good. How's the conference so far?
Good so far. Busy day yesterday. It seemed a bit busier than last year, I have to say. Lots of people attending our booth. We've got a booth here, from different angles, from investment angles, from actual BD opportunities, and just networking on mining products, basically. So good afternoon, actually.
Good to hear, great. So you are operating 2 mines, one in Kazakhstan and one in North Macedonia. Could you just give us an insight in the mines, the projects, and in your company?
Yeah, quick overview. We listed on the London Stock Exchange, the AIM part of the London Stock Exchange in 2010, and we raised $60 million at the time to build what's known as an SXEW facility. That's solvent extraction, electro-winning copper cathode facility in Kazakhstan, more or less in the centre of Kazakhstan, just north of Lake Balkhash. It's an in-situ dump leach project, so we don't move any of the ore, so it's very low-cost operation, and then we put it through this SXEW plant, which is used the world over for around about 30%, I think, of the world's copper production. We only produce small amounts, around about 14,000 tonnes per annum, and the world's output of copper, as you probably know, is closer to 22 million tonnes. So a very small operator, but very low cost and profitable. We built the plant on time back in 2012, and this year we celebrated our 10-year anniversary of production at Kounrad. And so to date, we've produced around about 134,000 tonnes of copper, pure cathode copper at very low cost. Our average over that 10-year period has been 54 cents per pound, which is around about in dollars per tonne, and the mining industry is bad for this, isn't it, Tim? Wow. In terms of different metrics, etc. It's about $1,100 per tonne of C1 cash cost, and copper, as we know, is selling around today $8,000 per tonne. So a highly profitable operation, around about a 79% EBITDA margin at that operation. On the back of the success there in 2017, at the back end of 2017, we spent $402.5 million to acquire an underground lead and zinc mine in North Macedonia. This is more traditional mining, where you drill and blast and take the ore to the surface and put it through a flotation plant to create lead and zinc in concentrate. And annually we produce around the quantum of 20 to 22,000 tonnes of zinc in concentrate and about 27 to 29,000 tonnes of lead in concentrate, which we send to smelters for onward sale into the commodity markets.
So what's the resource base at these 2 mines, and what's mine life?
Yeah, mine life of both. In Kazakhstan, Kounrad has a mine life out to 2034, and at Sasa it's a mine life out to 2037, at those kind of levels of production that we just talked about.
Okay. So you're paying dividend, which I would love as an investor. That's great to hear. Since when do you pay a dividend, and what's the history of the dividends?
Yeah, the dividend's an interesting one. When we first set out at Kounrad and came into production, as I said before, in April 2012, in the first 8 months of the remaining of that year, we were generating good cash flows. Metal prices were fairly good, low cost operation, and we decided to institute a dividend policy. And at the time, it was based on a percentage of the revenue at Kounrad. And then, obviously, when we acquired Sasa, we had to mature a little bit from that into a free cash flow basis. So we have now been paying dividends since 2012. Our current dividend policy is that we pay back to shareholders a range between 30% to 50% of the free cash flow that is generated from those 2 operations. And in the first half of this year, that was $52 million of free cash flow. So we paid back for the interim dividend this year a 10 pence dividend, which equated to 40% of that free cash flow number.
Okay. So I think you already mentioned that you have a high EBITDA or high margins. So can you tell us something about this?
Yeah, we like to operate in the lower end of the cost curve. We haven't got any debt on the books, so we paid the debt off from what we used to acquire Sasa. So it makes it easy to sleep at night, should we say, Tim, in many ways. And we generate, as I said before, Kounrad is a low-cost operation because it's in-situ leaching, so we don't have any of the expense of moving the ore onto a pad and agglomerating it, etc. So we're fortunate at Kounrad in that we do have low-cost operations. And at Sasa, what attracted us to Sasa was, again, low-cost operations. As a consequence, we operate in the lower end of the cost curve, and therefore we produce higher EBITDA margins. At a group level, that's around about the 60% level.
Okay. So no debt
no
left?
Debt now. No debt left.
No debt left. What's cash in the bank?
Cash in the bank is around about the $55-60 million mark. We've fully repaid the debt which was $187 million that we took on to acquire Sasa. We've fully repaid that back in August of this year. So the treasury balance is building up, and our intention is to use that money in three ways effectively. One is to continue the dividends back to shareholders, because I think it's been very well received. If we take on an acquisition, it will be to pay back debt on that acquisition, because we will use debt funding to finance it probably. And also to grow the business at Sasa. We're doing a project at the moment at Sasa, which is to transition the mining method from what is currently a sub-level caving method to cut and fill method, which has got a lot of benefits in terms of improved safety. It will increase the life of the mine effectively, because it will allow us to go lower with the geotechnical stresses in the mine body. And also there's a very important factor, which is the environmentally friendly management of the waste that comes out of the mine, which will then be done through dry stack tailings and putting almost half of that waste back into the void through paste.
So also in green energy, because you built a solar power plant.
Yeah.
Can you comment a little bit on this?
Yeah, I mean, we've worked hard over the last 3 years at our kind of ESG credentials, and we've put out 3 sustainability reports now. In Macedonia, we've acquired 100% renewable energy from our electricity supplier. We have a certification process that confirms that that is 100% renewable. So in Kazakhstan, which as many people will know is primarily a country that's based on coal-fired power effectively, and we take our power from the grid, the cost of that power we benefit from because it is very low cost. But in order to show our green credentials and show some kind of willing towards a transformation in Kazakhstan, we thought we'd build a solar farm. I think on commercial terms, it's probably about break even, because you're comparing the cost of solar power, which is actually quite cheap these days, with the cost of what at the moment in Kazakhstan is very low power costs really. So it wasn't driven by a commercial requirement to save costs, it's more driven by our ESG credentials. And that power plant is quite small by international standards. It's going to cost about $5 million for a 5 megawatt plant, and will supply about 16 to 18% of our electrical requirements at the Kunrad SXEW facility, and reduce greenhouse gas emissions by about 10% in Kazakhstan.
How does the shareholder structure look like? So what is management holding? Do we have institutional investors? Or
we have a lot of institutional investors who've been with us since we first floated back in 2010. There's been churn a little bit along the way, but probably around about 65 to 70% of our shareholder base is names that people will know in the London market. People like BlackRock and Fidelity and Polar Capital, Majidi Asset Management. People like this that have invested and been in and out of the company, but have been long-term followers. Joe Hambro, for example, of the company. Some came in at the Sasa acquisition, some have been there since day one when we listed in 2010. Management themselves, probably only of the magnitude of about 2 or 3% ownership of the company through the initial IPO, and then through subsequent options that are granted in terms of performance-related options for the performance of management, executive management, in how we manage the business.
Okay, Nigel, what are plans for the next year, next 12 months?
Yeah, plans for the next year, in some ways they're very firm, what we need to do. The transition to cut and fill mining at Sasa is occupying a lot of our time, obviously at Sasa it is. We intend to complete the construction of the backfill plant in the first half of the year, and then move on to the construction of the dry stack tailings plant in the second half of the year, and the landform associated with that dry stack tailing facility. So that's going to be a big focus to complete on that next year. And also next year, obviously, we'll be looking again, as we have been this year, for further opportunities to grow the business, given our strong balance sheet and position in the market.
Okay, Nigel, sounds great to me. Thank you for your time and for this insight in your terrific company.
Okay, thank you.
Really like it and appreciate it.
Okay, thanks very much for your time, Tim. Thank you.
That was Nigel Robinson, the CEO of Central Asia Metals, live from the Mines and Money in London. I would say check out the company, do your own research, and bye-bye from London.